Jason always talks about, don't fall for the gloom and doomers because you miss out if that's just your total life. But I don't see what I present as gloom and doom. If there's gloom and doom on one side, there's opportunity on the other. And so the information that I presented had to do with the economy and where it might be headed in the short term.
Absolutely. And by the way, we would be remiss if we did not talk for a moment about the absolute scary craziness the stock market is going through the last few days.
Yeah.
I mean, why don't you speak to that for a moment? And as you do that, I'm going to check the stock market. I have not checked it today on my phone. But, look, I'm not a stock guy, as you know, but it is definitely an indicator of what's going on with the economy. So it looks like the S&P is up a little bit. The Dow is down. Everything was down last week. The last few days of last week, it was red on all indicators. But
what was interesting is it started to look very much like the 1987 stock market crash. And after closing on a Friday, when Black Monday happened, that was the single largest percentage drop of the stock market in history. And the charts, the up and downs and the patterns that it makes, was almost identical for like a 2-year time frame between today and 1987. So good, it broke that. I was saying it'll probably bounce tomorrow, or today now.
Yeah. So it bounced a little bit, but look, Mike,
the thing is, though, the public is more exposed to stocks than at any time in history. The percentage that the individuals own is greater than at any time in history. And the stock market, there's only one way that you can measure it that doesn't show us in the greatest bubble in history right now. And that's PE ratios. And that shows us as being in the third greatest bubble.
Mm-hmm. So, yeah, PE ratios are pretty high, but you're saying they've been worse before, or higher, or more out of whack, I should say, before, right?
Yeah. The NASDAQ bubble in particular.
Yeah, good stuff. So, what do you think this is showing us in terms of all the craziness that's going on with the stock market for the overall economy? And what are your predictions on the stock market? And I should say, the few of you who don't know Mike Maloney and his legendary work, he's a sound money guy. He runs goldsilver.com, and he likes hard, sound money. You don't like the financialization of the economy, the fiat money situation we're in.
The way our monetary system works is currency creation is now based on theft and fraud and enslavement. Years ago, we had a gold standard. And the gold, I don't like gold standards. I like gold. It's the least dumb monetary system that we've ever had. But the modern monetary system, when we were under gold, to create a gold coin and save it up to buy a house, it took a certain amount of work. You had to prospect for a mine and then turn that claim into a mine and then dig up 30 tons of dirt on the average to get 1 ounce of gold. 30 tons of ore, there's about 1 ounce of gold in it.
That's a lot of energy and a lot of work to get to that gold.
And then you have to refine it and pour it into a bar, and then the bars get melted down and minted into coins. Now, that creates the currency, and there's a certain amount of work in that currency. If you then work to save up to buy a house, you've got this stack of coins, and the work that you've got to put in pretty much equals the work that it took to make those coins. Mm-hmm. And then you're going to buy a house, and the chopping down of the trees and the digging up the cement.
That's all energy.
And paying all the guys to hammer that thing together. These 3 different things, it was a fair trade each way. The amount of energy required to have that purchasing power, that stack of coins, equaled the amount of energy that went into building the house. Today, the way the monetary system works, most people don't know that about 92% of the currency supply is bank credit. If you've got something digital, if it's in your bank and it says you've got a certain amount of dollars, the bank created those, not the Federal Reserve. The Federal Reserve only creates bank reserves, which we never get to touch. That's a separate monetary system. And they create the paper notes, the Federal Reserve notes in your wallet. And so...
otherwise known as dollars.
Yeah.
The Federal Reserve notes.
Yeah. Right. And so the way that currency is created now is you go out and you find a house you want to buy, and it's $1.2 million. Go to the bank and you say, I found this house, and it's $1.2 million. I need to borrow $1 million. And the bank looks at you and they say, well, you've always paid your loans in the past. And they look at the collateral and go, yes, you've got the right loan to value ratio here. And so, yes, we will loan you $1 million. And they type new dollars that did not exist before, that there is no work put into to create into existence. They credit your checking account with them. And when you pay the seller, those new dollars that are empty, basically, have no real purchasing power. It's like counterfeiting. It steals purchasing power from all of the rest of the currency that's out there in circulation through inflation.
A couple things I want to just point out here. Number one, the rabbit hole of understanding how money is lent into existence is really interesting, and everybody needs to understand. It's hard to get your head around it. It's such a crazy system, but money is lent into existence through fractional reserve lending or fractional reserve banking. I guess you could call it either one. Now, when we talk about how that causes inflation, is you create new currency units, limited supply of goods and services, more currency units chasing those. And, as I always say, and I said yesterday from the stage at Empowered Investor Live here, is that there are two primary value drivers for everything. And I don't know if you agree with this or not. I'd like to, challenge me on it if you don't agree. But the two primary value drivers are scarcity and utility. That's what makes anything valuable, right? Is how scarce is it and how useful is it? Money is not scarce, or currency. We should distinguish that, right? Money, things with intrinsic value, whether they be precious metals or building materials, those have intrinsic value because they are used by every human on earth. We all need food, clothing, and shelter. They have intrinsic value. It doesn't matter what currency you're trading them in. They're valuable because they exist. And so scarcity and utility. So maybe you can kind of speak to a couple of those things for a second.
Sure, I will. But I do want to mention my last book, Great Gold and Silver Rush of the 21st Century, deals a lot with this. And there are a couple of free chapters. Chapters 3 and 4 are online. They're available for you right now for free. And you can download them, send them to anybody you want. I just want as many people to see.
Where do they go to get that?
That would be ggsr21.com. So it stands for Great Gold and Silver Rush of the 21st Century, ggsr21.com.
So that's for the free chapters.
Yeah, chapter 3 is it's a primer on how to read charts. And anybody that's got a chart in an article, you really got to look at that chart, because typically they'll do something to manipulate it and put a spin on it to try and prove their point. But you are being manipulated if you don't know how to read them, if you're fooled by them.
And well, what chart are you referring to? Any chart?
Any chart that somebody makes. There's like, if you change the scale on the side, instead of starting at 0 to 100, it goes from 90 to 100. Yeah. It can make a little tiny correction that you can barely see on the chart actually look huge.
Right. Yeah.
And if you put two scales on the chart, you've got two lines on the chart. If those scales aren't, if they're different, again, they're lying to you.
Yeah.
And it's entertaining. It's a fun chapter. Then the hardest chapter is the one on how currency is created. And that's what we were just talking about. And it is a deep dive into the Federal Reserve. And I take apart parts of the Federal Reserve Act. And I'll quote this whole page of Federal, and then I'll just highlight some words in red. And you read the red words and you can understand what they're actually saying in this thing.